Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, we have briefly tested also 25,500 on the downside today. We're right now down by 131 points at 25,506 on the Nifty. Near the low point of the day, it's been choppy as downward hill as far as the markets are concerned. There are several pockets that have remained from contributing to the upside to the markets today, like private banks, real estate, financial services, autos, metals, FMCG. These are the pockets that are dragging today. Although it's the PSU banks that have rallied very smartly, bucking the trend 2.7% higher. You also have the broader markets that's holding up, pharma, consumer durables, and slight gains in the IT sector are somehow stemming the downfall for the markets as well. Top movers right now at the closing hour, you have Trent 2.6% higher. State Bank of India, IndusInd Bank. You also have Bharat Electronics as among those top movers. On the downside, you have Tata Consumer Products, Axis Bank, Maruti, Hero Moto and Kotak Mahindra Bank. Those that are not really contributing to the trade right now. Let's welcome our guest on board to understand more about the insights on the markets and the outlook. Mr. Sudip Bandyopadhyay. He is the Group Chairman of Inditrade Capital and he joins in on the program with us. Warm welcome to you, Sudip sir, and thank you so much for taking the time out. You know, we are talking to you at a time when you look at every direction and everything is moving towards the record high levels, you know, Indian markets, US markets, gold, silver. So it looks like, you know, a Goldilocks scenario at this point in time. But sometimes too much happy news and, you know, too good times also don't stay for too long. So I wanted to just understand from you, how are you looking at the markets?
Well, good afternoon, Sakshi. I think you have to be careful, and you're absolutely right. While it is everything is looking good at this stage, there are enough and more reasons to be a bit worried and cautious about. Volatility will remain in markets. Look, a couple of things are going to happen in the near future. One is 9th July is approaching.
Yes.
9th July is deadline for the Trump tariff pause. So one doesn't know what's going to happen, and I don't think anybody in the world can guess also. I think there are a whole lot of things which happen on a daily basis, and this is one thing which we have to be cognizant of, and it's got a significant economic impact whichever way things swing. I'm not saying it will be a permanent damage, but volatility will be there as we approach 9th July. That's point number one. Point number two, I think the geopolitical situation, while things have improved significantly from where it was, say, 1.5 weeks back, things are still very fluid and very uncertain, I would say, both in West Asia as well as in Russia, Ukraine. Geopolitical stress, geopolitical tension is still there, simmering beneath the surface. So it is better to be careful and it is better to be prepared for volatility while things are good, and it's a bit of a relief rally, I can say, post the weeks of geopolitical tension. It is a relief. Global oil prices are under control. That does help markets like India. Of course, India has got multiple macro and micro factors which are favoring at this stage. Monsoon has been good till now. Interest rates are coming down. Corporate growth is coming back, as was evident in last quarter results. Expectation are that this quarter, which is going to end today, results will be better. So I think all these things are creating a positivity in Indian markets. Also, one must not discount the fact that significant amount of inflows are continuously coming from domestic investors. FIIs also have started looking at India very seriously. So I think it's a good scenario to be in, but it's better to be careful and it is better to be prepared for volatility, because we strongly believe that markets will not move in one direction. It will keep moving up and down. Bias is definitely positive.
Absolutely. So very important points and several of them that you've made. We'll come to each point in a little bit of detail to understand deeper, sir. You talked about the 9 July deadline, and you know, so far there are only two nations that have managed to strike some sort of a deal with the US on tariffs. It's UK and China. Although there were statements from Donald Trump himself that he was expecting a big deal to be signed with India pretty soon. But there are also some suggestions and indications coming in that Trump's no barrier trade pitch to India has also come in. How are you really looking at, how will the markets read into what's going to be good and what's going to be bad in the tariff policy, if at all, sir?
Well, I think there are too many nuances, Shakshi, and one needs to be cognizant of that. I think US has a demand on opening up the agriculture sector, which is a very sensitive topic in India. And 60% of Indian population still directly, indirectly depend on agriculture and monsoon. It's not so easy to open up agriculture in India, considering the scenario under which the current government and the political establishment operates. So one has to be careful, and I'm not sure beyond politics whether it's in the interest of India also to open up agriculture completely to US products. The second issue is again financial services. There are lots of regulations, lots of constraints from a foreign investor point of view as far as financial services concerned. I think US has a demand in that area as well. Again, I think it will be a little difficult for India to open up entire financial services space for US corporates in a manner in which it is being desired by US. So there will be pulls and pressures, and somewhere a middle path has to be struck. Knowing Mr. Trump and how he operates, I think the way his actions are interpreted, I think he goes for extreme demand, and from there he starts negotiating, and somewhere deals are struck. So while he asking for complete opening up of agriculture, financial services, and multiple other sectors, I think an accord can be signed where we both the sides meet is somewhere in between.
Okay, fair point. I hope this has got a lot of viewers really understand how things could progress. Another thing that you marked out, which will be important to watch out for, is another 10-12 days we will start getting the Q1 earnings. You did mark out that the corporate earnings growth is returning. Some signs were available for us to see in Q4 as well. But with the fresh first quarterly earnings of FY26 knocking on the doors, what is it that you are anticipating? Where do you think outperformance could continue?
Well, I think there are sectors where there will be pressures and there will be sectors where things will be improving. But one has to remember that you have to take Q1 numbers with the pinch of salt, is that we are in a monsoon season. And monsoon time, there are demands for certain products and services which comes down. And one has to take that out to guess the actual improvement in demand. Once you have done that, I think you will see that things are improving in cement in a significant manner. Demand has come back in cement. Forget the monsoon related depression in demand, but overall the cement sector is looking very good. So you take out the monsoon seasonality, I believe cement will outperform and perform much better than what it was doing few quarters back. You also need to look at FMCG. I think things are improving. Rural demand is coming back, and urban demand, where there was a marked slowdown, I think things are improving there as well. So FMCG, the entire FMCG pack, I expect better than the results which we have seen in last few quarters. As far as IT is concerned, you will continue to see subdued numbers, and one is prepared for that. Market is not also expecting anything great there. As far as infrastructure is concerned, a lot of money is being spent by government. While the budget announcement was for 11 lakh crore plus spending, I think it got bunched up in the last few months, and a lot of spending has started happening. So infrastructure sector will see a lot of excitement and a lot of good numbers. So I think that's how you have to go sector wise and see what's happening. Oil and gas, of course, the upstream companies will have a little bit of a challenge because oil prices are coming down, whereas downstream marketing companies and others will have a lot of positivity, at least in the current quarter, when the results will be announced. Some of the users of oil and oil-related products, oil derivatives, will benefit because the costs have come down. Let's take the case of aviation turbine fuel. 50% of airlines operating cost is on account of ATF, and ATF prices are reasonable, have come down. And so obviously aviation industry will do well. Leave aside the Operation Sindoor related disruption, but if you can isolate that, I think the industry would be performing very well.
Okay. So let's talk about the heavyweight sectors also. IT is the first one I wanted to take your view on, especially because this will be the first point of reaction that we will see as to whatever happens in the US. We were hearing of it when US, there was a talk about recessionary fears in the US. That's of course gone down substantially with the IT sector now considerably improving after Q4. Is there more upside? Is there going to be some kind of challenge that the sector has to continue to face, especially after what we've seen from Accenture's guidance and KPIT also talking about uncertainty continuing, talking about slowing of the closure of the deals as well. How are you looking at the IT sector, sir?
Well, I think we have to be prepared for a subdued set of numbers. I don't think there will be any major excitement which will come back to IT. I think the US related challenges for Indian IT companies continue to remain. Accenture has been conservative in their forecast, and that's predominantly on the back of, at least they cited the reason of slowdown in allotment of new government contracts in US. As far as Indian IT is concerned, they're not too much dependent on US government contracts, but apart from that also, overall there has been a lot of uncertainty in US, which has led to US corporates slowing down on going for incremental projects or enhancing the size of the project or even awarding large contracts. So I think we will see a bit of a slowdown in terms of new order as far as IT sector is concerned. I don't see Indian IT companies coming out with any clear roadmap also of the future in their commentary post earnings, which the market awaits eagerly. So for IT, the situation will continue to remain a bit fuzzy and bit uncertain even after the end of this quarter, till uncertainty in US gets cleared.
Okay. So when we talk about BFSI, we are at the end of the first half of the calendar year. We had begun by talking about which are going to be the most important themes to track this year. Even you had talked about financials where you were positive on, and we have seen the Nifty Bank as the outperforming one. Over 12% gains in the first half of the calendar year is something that we have seen. Large private sector banks have contributed, financials have also contributed. Now finally we are also seeing the PSU Bank starting to play catch up as well. For the rest of the year, the calendar year, do you think financials still have the steam to continue to outperform, sir?
Oh, absolutely. Financials do have this team. I think we are expecting a good growth in the economy this year. And if that is has to happen, financials have to perform. Credit demand is coming back, and that's
Yeah.
extremely good news for the economy and the BFSI segment. Also, interest rates are coming down, and the way the inflation is shaping up, I think it will further come down. And if that does happen, it helps BFSI. So BFSI technically we'll get into a Goldilocks situation. Asset quality also is stable, and there's been significant improvement in asset quality over the last couple of years. Yes, there is a bit of a challenge as far as unsecured loans are concerned, but that's a very small portion of the overall portfolio of large conglomerates in this segment. So I won't be too worried about that at this stage. So yes, BFSI should continue to do well, and beyond the only the banks, BFSI includes insurance. They have been doing well, and they will continue.
Yes.
Look at gold loan companies; they're doing well and will continue to do well. So I think multiple segments, asset management, of course, they are doing well, and the momentum is there. Financialization of saving is happening. So I think it's a good situation as far as BFSI is concerned, and they will continue to grow.
Absolutely. So that's as far as the banking and the financial sector goes. What about momentum sectors, sir? Defense, railways, is most of the good news already priced in? Do you feel again are they getting into a cautious trade zone? Because what we've seen is that in the previous rally, a lot of retail investors entered right at the peak of the rally, and then they got stuck for about 6-8 months of consolidation, stocks falling 40-50% from their peak. This is the second time around when the defense stocks have actually rallied from geopolitical tensions back home with India and Pakistan conflict, continuing all the way up to Iran, Israel, and the order replenishments coming in, new wins also coming in, export good news coming in as well. But I want to understand how much more, or is it a story that will continue to grow for next many years, sir?
Well, it will be a story which will continue to grow for next many years, but Having said that, is it the time to buy? I don't think so, because valuations are not cheap. And if you're a very long-term investor, then maybe you can get into it. But otherwise, the valuation does look rich. Look, what's happening in defense is that the counters do get excited based on order wins. Now, order wins doesn't translate into P&L immediately. It takes long time for the orders to get executed. And there is a significant challenge as far as executions is concerned amongst defense companies. And we have to be very cognizant of the fact that execution will be the key as far as these companies are concerned. There's no dearth of orders. Look at HAL. They are sitting on lakhs and crores of orders, and
Correct.
they can go ahead and win another lakh crore of order as well. But the whole challenge is execution, because the execution only will give them profitability and long-term benefit from the shareholder point of view. So I will say that be a little careful, because the valuation is not cheap. However, if you have a long-term view, please get into it. There's no problem. This is a sector which will give good returns over a period of time, and there is no problem. There is still many more things which will happen in this sector. Rearmament is happening around the world. So beyond domestic, I think export markets also will open up selectively. Multiple companies, again selectively, will benefit out of this export opportunity in the defense as well. So I think considering the low cost manufacturing base which India provides, and kind of neutrality in the overall geopolitical sense which India provides, will give Indian defense companies a big opportunity to participate in the global arms race, as so to say, and benefit out of that.
Okay, fair point. I hope this has also given a lot of sense to all the viewers who are very keen on defense space as a theme that they have been looking at. Before I come to some several macro sectors, I just wanted to come to a few groups. One is the Raymond Group. Today, the entire group is in focus. You have Raymond up 13 odd percent, Raymond Lifestyle about 15 odd percent. This is after the chairman and managing director Gautam Hari Singhania has highlighted and reiterated to shareholders that they're going to be creating Raymond 2.0. Tomorrow is when we expect Raymond Realty to get listed. Of course, those investors of Raymond who had the stock in their portfolios till the record day in May, they will be getting one free share of Raymond Realty as it gets listed. But I wanted to understand, what is the opportunity now there? Three group listings now that will be available to retail investors at large. How have you been reading into the group and their new forays, their efforts to reimagine and restructure the company with three-pronged focus? Gautam Singhania is talking about creating enhanced shareholder value. What is it that you read, sir, into the entire thing?
Well, I do like Raymond's Limited. I think that's a company which now has only defense, aerospace, and precision engineering. As we know, these are all sunrise sectors, and we just talked about defense. I think yeah, and aerospace, which is where I think Raymond's Limited is working, along with precision engineering, which is very critical for EV segment. And again, that's a sunrise sector. So I think Raymond Limited looks very good. In fact, I had been recommending it when it was less than 600. It's significantly moved up, but even now it does look good,
Okay.
because the opportunity size, we talked about defense opportunity size, and they are in niche areas. They are not into large projects execution. They are into supplying components to defense OEMs, let's put it this way, and aerospace companies. They are with Pratt and Whitney, they are with Safran, so the leading aerospace companies they are with already. So I think this gives them a unique opportunity. So this is a different Raymond. By Raymond we used to mean the lifestyle business.
Yeah.
That's a different business. So when I talk about Raymond today, the Raymond is a aerospace, defense, and precision engineering company. And we have to remember that this is a completely different Raymond. And that's the Raymond I'm talking about. Real estate, I understand listing is tomorrow. We'll wait and watch. I think the potential is significant. They are predominantly focused on NCR, and the Thane projects has been doing well. They have now new projects taken up in MMR region, and we'll have to wait and watch. But it's a good opportunity, undoubtedly. But if I have to pick up one company in the group, I will pick up Raymond's Limited, which is, as I said, aerospace, defense, precision engineering.
Okay, brilliant. This definitely gives a lot of understanding to all our viewers who've been looking at the huge volume spike that you're seeing across the Raymond Group right ahead of the realty listing as to how to go about it. But of course, tomorrow again, we'll be starting to track the real estate story and how it goes forward. We have had Mr. Gautam Singhania on the channel also talk very favorably about his outlook on the real estate division, although he did say that all the three engines will be his growth drivers for enhancing shareholder value. But real estate, he definitely believes, has a higher growth potential amidst all three at the current realm, is what he also believed in. Okay, let's talk about a few more spaces. Let's talk about something which has been a big laggard of a space, Sudip sir, and that's the FMCG, the consumption basket. Why am I bringing that up in front of you? Remember when April started off, that means this new financial year, we were hoping that the fiscal measures announced in the budget will start to put more money in the hands of people, and then consumption will get kick-started. After that, the monetary policies also came in sync. Bazooka rate cuts came in, again leading to some kind of a demand boost that could probably come in. But despite all of these, we haven't seen FMCG and consumption-oriented sectors really pick up smartly. What is the reason behind it, and how are you looking at this aspect, sir?
Well, two things. One is you have to remember that the tax cuts which was given in the budget, and interest rate benefits which came through the credit policy, recent credit policy, these do affect consumer durables predominantly. They don't affect the staples. They don't affect the routine FMCG products. So they will have their role to play in consumer durable demand going forward. That's what I believe, and we will probably start seeing it from the festival season, forthcoming festival season.
Yes.
The second part of the hardcore FMCG staples and the consumer non-durable demand, which is the soaps and shampoos and powders and blah blah. And now these demands has been sluggish, and that's what the industry has been complaining. We had a rural slowdown, then we had a urban semi-urban slowdown. Rural consumption, I understand, is picking up. Urban was a bit slow, but I understand as we speak now things are looking up. And we believe that this quarter onwards, which is the first quarter, we are just ending today. First quarter onwards, we will see a positive trajectory. I'm not saying they will be out of the woods or the results will be fantastic, but the initial green shoots of demand revival will be visible from this quarter numbers itself. Probably the full recovery will come in the festival season and more so in the second half of the current fiscal. But the signs of that will be visible now onwards. Consumer durables, as I said, they will be visible from the festive season.
Okay, got that. So we've got that into focus as well. Let me ask you on the PSU stocks, beyond the defense and the railway pack. This story has also been, in hibernation for some time now. How are you looking at the PSU space? Anything beyond the defense and the railways that interests you?
Well, of course, the banking, PSU banking space is red hot and a lot of excitement. And there is a valid reason for that as well, because the valuation wise, if you compare them with the private peers, they definitely look very, very attractive. And things have drastically improved. The PSU banks are not the PSU banks of 10 years back. A lot of things have happened since then. And the processes have been streamlined. Asset quality has significantly improved. The credit growth has come back. Interest rates are coming down, and of course the valuation is very attractive if you compare with private peers. So we are seeing significant traction in PSU banking space. SBI, look at SBI. I think beyond everything else, there is a lot of value unlocking opportunity coming as far as SBI is concerned when they exit out of Yes Bank. They exit out of partly at least out of their NSC holdings through listing. So opportunities will keep coming and presenting, and PSU banks are definitely very well positioned valuation wise.
Okay, fair point. Well, Sudeep sir, before we let you go towards the end of the session, I have to ask you to name a few stocks, if you could, for all our viewers for the second half of the calendar year. What are you promising or putting your promise on at this point in time?
Well, I did talk about Raymond Limited. I think that's a one good stock to look at, definitely. Remember, it is a defense play. aerospace and defense play. I just mentioned about SBI. I think it's looking very good at current levels. Again, BFSI continues to be a good spot to be in. Amongst other spaces, we do like the engineering giant Larsen and Toubro. Again, Larsen and Toubro can be looked at. You can look at some of the specialty chemical and chemical players. It was a completely bombed out sector till a couple of quarters back, but things have started improving and the green shoots are visible there. The inventory related challenges have kind of a thing of the past. So you can look at SRF, you can look at Aarti Industries, you can look at Naveen Fluorine. These are good bets at current level from a medium to long term point of view.
Fantastic. Sudip sir, always a pleasure to host you with us and seek such wonderful insights across the board that we talk about on the markets and various teams. I wish you well and we hope to see you very soon on another edition of Business Today. Thank you so much. All right, viewers, we'll start to wrap up. 2 minutes to go before the markets shut shop. We are at near the low point of the day, 25,510. But good part is that we've managed to come back above the 25,500 mark and off the low point of the day as well. About 0.5% low in trade. And we have, of course, the private banks, financial services to blame truly for not having participated in the rally today. Real estate, auto, metals, FMCG, oil and gas, these were the other pockets that were lagging in trade. But PSU banks, definitely firing away. 2.6% higher. Consumer durables also up 0.68%. This is the space that Mr. Bandyopadhyay did point out that during the festive season, this is the space that could start to buzz again. Pharma, IT, those are the pockets that are seeing some gains. You also have mid and small caps that are also hovering higher. Trent is up by about 3% as the top moving stock in trade today. BEL is 2% higher. SBI, as Mr. Bandyopadhyay again mentioned, is one of his favorite bets that he is talking about. IndusInd Bank, Jio Financial Services, Shriram Finance, Eternal, all of these names definitely doing very well in trade. When we talk about the F&O packet, well, you can actually see Keynes Technology 4.7% higher, Bharat Dynamics, PNB, these are the top movers. Whereas on the lagging side, Hero Moto, Macrotech developers from real estate, Tata Consumer Products and APL Apollo Tubes are the top laggards as far as the F&O action is concerned. You also had some movers in the PSU space today. BEL, Power Finance Corporation, IRFC, BHEL, RVNL, Concor, NHPC. These are the names that truly buzzed as far as the PSU action is concerned. As far as the gainers and the losers are concerned within the Nifty broadest index, you of course have Raymond Limited, which again is something that Mr. Bandyopadhyay did show that, did tell us that, this is what his favorite stock among the three would be. Of course, he will be watching out for the real estate stock and how it lists tomorrow and how it progresses going forward from here. But between the two listed, he's looking at Raymond Limited. Then apart from this, Force Motors is up smartly today, 11.5% higher. That's the one that's doing very well in trade. Ugar Sugar is up in trade. You also have names like, maybe we can also mark out for all our viewers Signpost India that's up in trade today. Very far and few between names. Banco Products, RV Laboratories, these are the names that are also buzzing in the trade as far as the broadest index is concerned. But we have the final print on the Nifty, 25,513, 124 point of a dip. So after 2 weeks of a move on the higher end and I think 4 days of gains, we are snapping that today. And you can actually see some softer start or the start on the back foot as far as the markets are concerned at the beginning of the fresh week. But of course, ending H1 of calendar year 2025, ending April to June quarter today. And of course, we are also at the end of the June month. Tomorrow onwards, we see, July beginning. Of course, new series has already kicked in. We will also be looking at fresh new triggers by way of Q1 earnings in this new month as well. So keep an eye. There's a lot more for us to track. And of course, as we inch closer to the very important deadline of July 9, we'll have to see whether this deadline gets any extension and announcement comes anytime soon, so that we will have to keep waiting to find out what more is in store as far as the US tariff policy is concerned. So stay tuned. There's much more for you to track even beyond the market hours.
deadly Puri stampede during the revered Rath Yatra of Bhagwan Jagannath. Devotees succumbing to the killer crush amid the